Today we're going to talk about what levels and trends are, why cryptocurrency is technical, and why you can make money on cryptocurrency. And I'll explain generally how to remove the psychological factor, and how to more or less make a small such trading algorithm to still learn to do something right. Because the bulk of people, here's even me watching, following my channel, friends, you're doing a lot of things wrong. Because of that you're losing your money and learn technical analysis first and foremost. Learn how to draw levels correctly, how to draw trends correctly, how to correct it all correctly, how to look, how to analyze what is stronger, what is weaker, where we will go, where is the empty zone, where we will fall sharply, where we will go cumulatively. I talk about zones on YouTube too. There's a box popping up right now in the top right or top left corner. I can't remember. Check it out. I talk about what zones there are and how the instrument moves in those zones. Empty zone, contaminated zone, uncontaminated zone. Please watch this video. It's very helpful too. Here, today we're going to talk about levels. What types of levels do we have after all? There are 3 kinds of levels. In fact, first, let's start with 2 of these big groups. The first group is a clear level. I'm going to draw a little, I like to draw, and I'll show you everything. What is a clear level? In general, what is a level? A level is a point which instrument comes in all the time, meaning it approaches, retests, either makes a touch, or a false breakout, or there's a breakdown, or there's a consolidation, or we see there some kind of limit player. Yeah, so the level is the point, it's the price. So we have a clear level. What is a clear level? It's already clear from the definition. I'll take a brush and show you when a tool clearly approaches a level, shows a bounce, for example. Yes, for example, we are clearly approaching the level, we broke this level, we protested at the bottom, we went for a pullback. That is, we see a clear level, we see these touches, and, accordingly, we see that there is a level here, it is mirror-like. And, accordingly, we will already make some definite conclusions and trade some definite strategy in relation to this level. It's a clear level. Second, we have the next kind of level, which is a floating level. What is a floating level? That's when the level starts to fizzle out. That is, there's no level in this place, it is not clear, you should never trade near it. I'll explain why. What is firmware? So we're sewing this level in different directions like this. Bars are down today, up tomorrow, down today, up tomorrow. We're in the middle of a trade. That's a level prong. Why can't you trade? You know from the last lesson that we only have 2 players in the marketplace, the buyer and the seller. Accordingly, there's a buyer-seller struggle here, and there is a battle over price. Either the buyer wins and the instrument starts to consolidate, in the long zone, bounce and go up, or the seller wins. And we start to consolidate here and go down. That is, you have to wait for one of the players to win, get on his side and go either long or short accordingly. All of them. Now those are 2 huge groups, that is clear and floating. Next, there are levels. Supports and resistance. What is an endorsement? I always draw support in blue on my charts, meaning the instrument went to the top, came in at the bottom and bounced to the top. So this bounce is showing us that there is a support level here. What is a resistance level? I usually mark resistance on my charts in red. That is, we come already from the bottom up to the level and start bouncing down from it. I mean, it's like this. This bounce point tells us that there is a resistance level here. That is support and resistance. 2 types of levels. The levels are further subdivided into the following types. We have a trend break level. What is a trend break? This is when an uptrend reaches a certain point, a strong point. Yes, a limit player, let's say, stops the subtrend, and we have a trend starting to reverse, and we go down. Yes, so this is the trend break, from uptrend to downtrend or vice versa. Yes, we had a downtrend, and we made an upward sharp move. I mean, like Bitcoin, pay attention. We came to this level. We have 19,700 level. We came and we turned around sharply here. It's a trend break, the downtrend. The local downtrend has turned to an uptrend. It's a trend break. Accordingly, you should understand that in order to stop this sharp movement, distribution, to buy back all this, we have a strong player here, a strong enough player, who has enough money to turn it all around, and, accordingly, we understand that when the instrument comes to this level again and starts to retest it, the level is strong, we will bounce from it. So you already realize that from this level 20,048.04 you can buy. And you already realize that you're not just opening a chart and doing nonsense, right? The fact that you have already found the level from which you will be making a purchase. Put the purchase here, close the laptop and went about our business. You realize that when the instrument to this purchase comes in, there will be a rebound and you will get your profit. It's the same as with corrective bounces. One of the strategies that we trade, let's say BNB. Let's switch to the hourly chart. I understand that let's say there's some strong support level here, which is confirmed by history. Then let's say there's a trend break level, a mirror level, let's say a strong level. I realize that when the instrument gets to this level, we will see a rebound. Perhaps the rebound will not be strong. So I'm marking this level in yellow because I realize it's a risky level. Accordingly, this level should be traded very carefully, quickly move to break even. Now you should stand at break even and fix an hour position. You might even get knocked out, but that's okay. So, we get 1.81%. And it's the same with all the other setups. Here we have the Ontario. Ontario, since the level worked for us, we got our profit. We again came to the next strong support level, bounced off it and got our 5% profit. So you're no longer just trading in there, let's say, you're looking at the monitor, at this chart, yeah, like. I don't know what for. And you already understand, you can already find something here, where you can buy and where you can sell, yes, you already understand something. So we have a break level, a trend level. Trend break level is quite a strong level, and this level should be understood, seen and traded. Next we have the mirror level. What is a mirror? When we retested the level, retested it, broke through it and retested the bottom then, and went down a little bit, I drew it ugly. I'll draw it more precisely, this is how it is, let's say. It's a mirror level. I mean, first we were the support, and then we became the resistance. Alright, it's no big deal, guys, it's no big deal. We open the chart and find these levels. We're turning on daylight. Here I am asked, is it possible to draw levels on the 4-hour clock, on the 5-minute clock, on the hourly clock? You can't. They will be weak, they will be localized. Why do you need an intraday level? Here's the opening of the chart. Tell me, do you see a strong, let's say, support level here? Here I see, let's say, this is where I understand the level. Which is a strong support level. The level is 0.0513. This is the trend break level. I realize that when the tool gets here, I'll wait for my trade and take a buy right here. Where will I take my purchase? Well, up to the resistance level, of course. And I'm looking for a resistance level, the closest margin of safety, and I'm putting it here. Why here? Because there's a resistance level right here. Let's see here. Also, you see, resistance is confirmed. It's confirmed here. So this level is exactly the mirror level. Look, we touched here, we're touching here. So it was resistance at first, then it became support. This is the trend break level. And I'm going to tell you how you're going to practice. You open absolutely any chart. The level should be drawn from left to right, i.e. open the left part of the chart, cut off a part of the chart with the market simulator, and look like this, right? Let's say there's a trend break level right here. Like this, one, kink, here we have a kink, here we have a kink. Then here we have the scraps, and this one also counts as a scrap point because it was then eventually confirmed. Right there, see? So when we make a spill and bounce sharply, that's what remains a false breakdown if you don't see that side. And when we come to that point again, the level is confirmed. I mean, there they are, those kinks. These are localized fractures. There are local and there are global kinks. These are, for example, localized fractures. So we were going up, we corrected, we bounced back. Adjusted, bounced back. These are localized fractures. Here we have another break from downward to upward. Here's another kink. And you draw these levels, you take. So you look at these levels, look how clearly, you saw how clearly we bounced from this level. And so this trend break level becomes the mirror level. That's it, and you already understand where to take your purchase. So you would realize that price, if it goes into a correction, there would be a bounce from here. And we take a bounce here, let's say, we take a buy from this level. From here on out, it was just a lot of traffic. Look, did you see? That is, we had a rebound from this level, from this zone of even resistance, which was formed here on the trend breaks. That is, if you took from this lower short level, then, let's say, you would again get some profit there. Wow, 24%. So, you can see what a good correction went from this level. I mean, it all works. Let's take a further look at what's going on. Breakdown and consolidation. The instrument goes sideways and we have a mirror level. I mean, this level is confirmed right here, like a mirror. And we're starting to bounce back. That's it, we bounced 47%. We got a profit here. Again, this mirror is confirmed, but from below. So first from the top, then we break through, then from the bottom, confirm. Here's the mirror, we bounced it down. Let's look beyond that as we come to the lower support levels. Now let's see what happens from 0.1615. All levels that are below the price are support for us. All levels that are above the price are resistance for us. I don't know how much more to leaf through right now. Underachievement, breakdown. There was a breakdown of this level and its retest from above. So we confirm this level is a mirror. There's been a setback. Further we came to the level of 0.0921, it also worked out. You see, like if you put a buy here, let's say, 36% profit. So you see, how very good, look how clearly this level worked out, right penny for penny 0.1615. So you already realize that the levels all work. Even if we now open this moment of time, and I turn off the market simulator, we will see that the levels that we drew earlier also worked out the level here, and here we had support, and the level worked out as support, and here it became resistance. And cryptocurrency is a very technical tool. Guys, take it, use it, trade it. Now you and I are going to talk about friends. Here's that little bit of information for you on the levels. Now let's talk about friends. We have a downtrend, we have an uptrend. It's also very simple. I always use the beam, we take the magnet away, and this is how we draw, for example, the downtrend. Downtrend, localized, let's say uptrends. There's one here. That's how our downtrend works. Let's say we went down, connected 2 dots here. The instrument has broken, this trend is downtrending, so we can take along from this trend here on its breakdown or on its retest. That is, we can also have breakdowns, touches, retests, false breakdowns, and trades relative to the trend. Here we have the trend reasserting itself as resistance. Here's support, here's resistance. We're going into a major correction. Here, too, the trend is like resistance. The instrument has already gone sideways here. It's trending like an endorsement here. That is, we also work out trends as well as levels. It's simple enough, but it's probably easy enough for me. It won't be easy, of course, for you if you are newbies. So it takes practice. You have to draw 1,000 levels in order to understand it all in the end. You need to draw 1,000 trends in order for your brain to automatically set levels already. I told you that. Only 2 levels. The kink, the trend, the mirror kink, and so actually there's about 6 or 7 kinds of them out there, I think. Different kinds of levels. You need to understand how to adjust them properly, where to look at closing, where to look at the opening, on what highs, lows to carry out, what level is fresh, what level is old, and so on and so forth. Which strategy uses such and such levels, another strategy uses other levels. Anyway, there's a lot of information, guys. You might even have a messed up head. If you're studying on your own, you're 100% messed up. So, of course, you have to study everything in a structured way and put everything in its place. Here's wishing you good luck, good mood. Learn with Pro Trading and subscribe to my channel. You'll find a link in the description. Put definitely class, because thumbs up, yes, because your activity also determines my mood, whether I will continue to shoot you good content or still something to spare. Everyone, good luck, bye bye.